Hi there, this is Mr. Chauke. I'm a professional teacher for accounting. If you're watching this, you're definitely at the right place. Please make sure that you hit that subscribe button down there, and also that you leave your comments on the description of this video. And please also don't forget to share this lesson with your friends. Encourage them to also subscribe to this YouTube channel, and to also make sure that they leave their comments down there. And I promise you that it will make your accounting problems a thing of the past. With that out of the way, let's get into the lesson. Now, in this morning's lesson, we're going to be looking at how to prepare a statement of comprehensive income, which is also known as the income statement. An income statement, it is done in order for us to be able to determine whether we are making profit or not as a business. The most important thing about the income statement is that it is able to tell the stakeholders whether the business is profitable or not. It's one of the financial statements that we do in accounting. Okay, so with that out of the way, let's get into the lesson. Now, here they're saying that the following information was taken from the records of Sevenza traders on 28 February 2023, which means that the business opened their books on the 1st of March 2022. Okay, so we must be able to determine that financial period. So it will be 1 March 2002 to 28 February 2003. Very important. Now here they're saying that and this is the last day of the financial year, so they're saying that the business uses a markup of 40% on cost. Remember, I told you that once they tell you about that profit, you must think that your cost price is always 100%, and in this case your profit is equals to 40%, so which means that your selling price is out of 140%. This information will help you to be able to calculate the selling price and the cost price on some transactions that they will give you. Now here they say that we need to prepare the statement of comprehensive income for the year which is ended 28 February 2023, and this question amounts to 44 marks, which is supposed to be done in 35 minutes. Very important for us to be able to manage our time very wisely. But because for me, I'm a teacher, I'm explaining to you, I might take a little bit longer than what they required. Okay, so now when you do your income statement, you must remember the format is very important in accounting, guys. You must remember the format. Sometimes they will give you some items having been entered for you, sometimes they are not going to give them to you, but it's very important for you to know exactly what are you supposed to put in the income statement. So what we're going to do, we must also remember that the items that are inserted in the income statement are nominal section accounts. Some of the items that are at the balance sheet items will also be used. For example, when we look for trading stock deficit or surplus, we'll need to use the stock that was at the records. So that is also some of the items that we're going to use. So for now, let's start by entering only the details that are in the nominal section. So we are going to start with our sales. Our sales, according to here, is 588,000. So that 588,000 will come here. So we'd have sales as 588,000, and then from there we'll go to the information. We have cost of sales as 420,000. So on our cost of sales, we're going to enter that 420,000, and then from there we have our debtors allowance as 6,800. So remember, debtors allowance is subtracted from the sales, so that 6,800 will come here. Okay, and then from there we have rent income of 36,200. So all the things that I've entered, I will tick them. So our rent income is 36,200. We must check if it was recorded for us, and if you check here, they did not record it. So we have rent income of 36,200, and then from there what we can do, we check what else are we given. We are given commission income of 10,150. We must check if it was recorded for us, and here it is, it was recorded, so we can just tick it. Then we have our expense, which is salaries. Now here what you can do under the nominal section, you will notice that some items are on the debit side, some are on the credit side. The ones that you see on the credit side are our incomes account, but we must remember that all these incomes have got categories where they are placed. You'd have some incomes that are going to be part of your trading part where you are determining gross profit or loss, and you also have some accounts that are going to go to the other operating incomes accounts. Okay, like for example, your rent income, your commission, and so forth. And you'll also have some incomes that are going to be included under the interest income section. So you don't include all of them at once. You don't put them in one place. They have got special category where they're supposed to go. Now we also have salaries here of 43,500. So it was recorded for us, so we can leave it. Next we have insurance for 12,500. So this insurance for 12,500, we check if they recorded it for us. So they did not. So we'd have that insurance, and then we'd have that 12,500 here. Then from there we check what else are we given. We are given bad debts for 4,800, so we can also enter that bad debts 4,800. Let's check if it's there. If you look at this, it's not there under operating expenses, so we'd have bad debts, and then the amount that they gave us, they said it's 4,800, so that 4,800 will come here. Okay, and then from there we are going to check what else are we given. We are told that we have stationery for 3,320, so we also enter that stationery for 3,320. So you need to make sure, guys, that you know what to put and where is it. So that stationery has already been entered, so no need for us to enter it, we just check it. And then we have water and electricity for 19,100. If you check here, water and electricity has not been entered for us, so we'll enter it. Water and electricity, which is 19,100. Then we move with this. We are then given bank charges for 4,200, so we also enter that. Bank charges is not listed here, so we'd have our bank charges, and then the amount is bank charges is 4,200, so we'd have that 4,200 here. And then the next expense that we have here, if you look at this, is advertising for 2.3. Let's check advertising if it's entered. It has been entered here, 2.3. Then we can check what else did they enter. We have packing material for 7,100. This packing material was not recorded, so we will enter it here. Packing material, 7,100. Okay, and then from there we check what else are we given. We have the advertising for 2,300 has already been recorded, so there's no need for us to include it again. Then we move. We are then given interest on fixed deposit. You can see that it's on the credit side because it's an income. Now remember, according to the format, interest on fixed deposit is part of your interest income. Okay, so it's going to be that 1,620 will come here, so we'd have that 1,620 here, and then here we'd have interest expense will be controlled by the interest on loan. So remember, the amount here will be in brackets because it's an expense item. And also for cost of sales and operating expenses, make sure that you put them in brackets so that you don't forget, because learners have got a habit of forgetting that operating expenses in the income statement are supposed to be shown in brackets. Show that, guys, very important. So now we are done entering our information. So what we can do, we can just make sure that we go to our transactions. The first transaction says that the water and electricity account for February 2023 has not yet been paid. In other words, it is still owed. So therefore, because we are trying to make sure that our incomes are matched with the expenses for this year, we must increase this water and electricity by 1,830. So when we increase it, we are going to add. So this means it will now make our income, our expense for water and electricity to be equivalent to 12 months. So on water and electricity, we're going to say plus 1,830. So we have recorded the first one, plus 1,830. And then from there we can go to the next adjustment. The next adjustment says that stock with a selling price of 2,520 donated to a local orphanage. No entry was made. Now when you see this, you must think what is supposed to happen whenever there is a donation of stock. Remember, when we donate, we are saying donate, debit donations, it's an expense to us, right? Remember, donations, it's an expense to the business. And then we are saying credit trading stock. Once I donate trading stock, the stock that I'm supposed to have must decrease. So now, and they said that this was recorded at a selling price. We know that donations and drawings are recorded at a cost price. So what we must do, we must use this information to get our cost price. Remember, they told us the information that the markup is 40%. So we're going to say 2,520 multiplied by 100 over 140, and then it will give us the amount that we must adjust our information by. So let's see, 2,520 multiplied by 100 divided by 140, it is giving us 1,800. So which means that our donations will be affected by 1,800, and our trading stock will be also affected by 1,800. So remember guys, the trading stock deficit or surplus calculation will be affected. So what we must do, we must adjust also the trading stock that is from the trial balance. And according to here, our trading stock from the trial balance is 44,000. So this 44,000 must be adjusted. So we're going to say that the 44,000 that we have recorded, we're going to say 44,000 minus 1,800, and then from there we are going to put donations as an expense under our operating expenses here. So we would have donations, you can just say 2,520 multiplied by 100 over 140, so that you can end the part marks and your amount will be 1.8. Very important for you guys to make sure that you show your calculations. Okay, so we are done with that part. Now the next transaction says that according to a fiscal stock count on 28 February 2023, the following items were on hand. Now guys, in the income statement, once they say that items were on hand, it means that these items were not used. So what you must do, you must make sure that you subtract them. Once you see on hand, when you do an income statement, think about minus. These items must be minused. Okay, so we have the trading stock, the one that was not used, amounted to 41,000. So when we compare our records to this, we should get the same amount here. So let's check before we do anything. Remember, the adjustments according to the actual stock that is available. The actual stock, it's 41,000. Okay, so we need to compare between our expected and actual. So remember here, this is the one that is actually available. So now if we say 44,000 minus 1.8, minus 1.8, it is giving us 42,200. So we were supposed to get 42,200, but we are actually getting the stock that amounts to 41,000. So which means that there is some stock that is missing, and whenever there is some stock that is missing, we're going to have trading stock deficit. So that part will come here, trading stock deficit, and then we're going to say 44,000 minus 1.8, and then minus 41,000, it will give us that shortage of that stock. So let's do that calculation very quickly. So we're going to say 44,000 minus 1,800, and then we close that bracket, then we say minus 41,000, and then it is going to give us our missing stock, which is let's see here, it is giving us 1,200 here. So now let's go to where we're doing our records and try to verify if we're getting the same thing. So if you say 42,200 then you say minus 41,000, it gives you 1.2. So that's how that recording should be done. Okay, then you would have around 4 marks here for this transaction. So very important, guys. Now the next one here is, it says that packing material on hand was 1,950. Remember I said when they say on hand, it means you must subtract. So our packing material, we must subtract minus 1,950. Then you are done with this transaction. So let's go to the next part. The next part here, they're saying that insurance includes an annual premium of 39,000 3,960. Now once they say annual premium, think about 12 months. It means that this item was paid for 12 months. They say it was paid for the period from 1 September 2022 to 31 August 2023. If you count from September to August, you're going to realize that it's going to be 12 months. Okay, so maybe let's do it here so that you don't get confused. So let's check here. Remember, it's going to be September, October, November, December, January, February, March, April, May, June, July, August. Okay, now look at this. Let's look at our information. Our year ends on the 28th of February. So if I count, the best thing that I can do to not be confused by this transaction, I can count from February to August. Okay, so it will tell me how many months this transaction has been paid in advance by. So if I say from March up until August, so I'd have March, April, May, June, July, August. Okay, so it means when I look at this, it is paid in advance by 6 months, but you can also confirm by looking here. Remember, your year ends here in February, right? And then so meaning that March, April, May, June, July, August, it is also that 6 months that you have received this in advance for. Okay, so what I can do is that I can just take this amount that I'm given here. I can just take this 3,960. I can just say 3,960 multiply by 6 over 12. It will tell me what is my prepaid amount. So if I say 3,960 multiply by 6 divide by 12, it is giving me 1,980. So this 1,980 was paid in advance for the next financial year. So I must subtract it because it has overlapped to the next financial year. So I would have under insurance, I'd say minus 1,980, and this part will be 2 marks here. So very important for you to make sure that you understand how it was calculated. Now the next transaction says that rent for February has not yet been received. So now this already tells me that I've received rent. I've received rent for 11 months. So therefore it tells me that my rent is accrued by 1 month. And when you do transactions, guys, it's very important for you to analyze. Okay, now here they're saying that the rent was increased by 300 per month with effect from July 2022. So meaning that this amount that I got, remember for rent income, the amount that we got for rent income according to this is 36,200. Now this 36,200, guys, this 36,200 is equals to rent for 11 months, and then it does include that increase that they are talking about. And according to here, they said that the increase took place on on the 1st of July. So meaning that I need to calculate the increase from July up until January. Very important for you guys to know how to calculate those months. So if I say from July up until January, remember we're going to have July, August, September, October, November, December, January, because remember February has not been increased. So we have 1 2 3 4 5 6 7, so meaning that we have 300 times 7. So this 300 for 7 months has been included in that rent. So 300 multiplied by 7 is going to give us 2000. It's giving us 2100. But I want to know how much were they paying before the increase. So what I can do, I can just take that 36,200, I subtract that 2100, and then I divide by 11 months. Then it will tell me what was the rent before the increase. Okay, so if I say 36,200 minus 2,100, it is giving me 34,100. Then if I say divide by 11 months, it is giving me 3,100. So which means that before the rent was increased, we were paying 3,100. So obviously after that, it's going to be 3,100 plus so therefore the amount that we are looking for is 3,100 plus the 300 increase. So which means that for rent after increase, we were receiving 3,400. So our rent has been it's owed to us by 3,400. So therefore rent income must increase by 3,400. So we must say under rent income, we must say plus 3,400. Okay, and then this part here of 3,500 will be 2 marks because you had to work it out. Very important. Okay, so now let's check the next transaction. The next transaction says that here they're saying that a debtor who owed 1,200 to Sebenza Traders was declared insolvent. I normally tell learners that if you hear that someone is insolvent, think about someone who is broke beyond measure and they cannot pay you. Here they're saying that his estate was able to settle half of the amount owing. So in other words, they were able to pay us 50% of this, and the instruction says that write off the outstanding amount. In other words, we must write off the amount that this person could not pay us. They only managed to pay us half, so we must write off the half that remains. So if we say 1,200 multiplied by 0.5, it will tell us that the half that this person was owing is that this person could not pay now is 600. So when we write off a debtor, remember we are debiting bad debts and we are crediting debtors control, but here we are only focusing on the income statement on the bad debt side. So we're going to increase our bad debts. Remember, the people that we are writing off are increasing by 600, so meaning that we are going to increase our bad debts by 600. Okay, now the next information says that the loan statement received from SAAB Bank on 28 February 2023 reflected the following. The opening balance is 150,000. The repayments that were made during the year, which are inclusive of interest, is 46,200. And then the interest that we are looking for is capitalized, is not given to us, so we must look for it. And then the balance at the end of the year is 117,700. Now, what you can do, if you take this 150,000 and then you subtract 46,200, you will see it's not going to give you 117,000. It's you are getting an amount that is lesser than what you were supposed to get after paying. So which means this amount minus 117,300, it is our interest expense. So our interest expense according to this will be 13,500, but you must show how you got that. Now I teach my learners that when you look for the interest that is capitalized and you are given the loan statement, you check the date. So they gave you the opening and closing, so meaning that what you will do, you'll be looking for the interest that is capitalized. Okay, so what you're going to do, you use bottom up approach. You start from the bottom, you go up. Where there's a minus, you put a plus. We know that a repayment here, it's a minus, interest here it's plus, and here it's also a plus. So when you do the opposite, this will be a minus, this will be a plus. So we're going to say in our calculation here, we're going to say 117,300 plus the repayments that we made. Okay, now remember the repayments, this repayments during the year is not per month, it's for the entire year. So we'd say plus that 46,200. So plus 46,200, and then we minus the opening balance. Our opening balance according to this is 150,000. So we'd say minus 150,000, and then from there we get the difference. So we'd say 117,300 plus I think it's, let me check that amount there. The amount there is 46,200. So we'd say plus, let me just correct here. Would say plus 46,200, not 4.2. Okay. So we'd say 117,300 plus 46,200, and then we say subtract 150,000, and then the amount that we're getting according to this is still 13,500, and you will have your correct 3-4 marks here for doing this. Okay, very important for you to practice that type of transaction. Now the next one here says that provide for the outstanding interest on fixed deposit, and interest is not capitalized. When they say interest is not capitalized, they simply mean that the interest is not added on your loan. Okay, so now when we do this, what we must do, we must make sure that we check what is our fixed deposit. So now our fixed deposit according to here, it's 24,000, right? And we are earning interest of 9%. So we're going to say 24,000 multiplied by 9 over 100, and then multiply by 12 over 12. We are going to check if it matches with this 1,620. So if you say 24,000 multiplied by 9 divided by 100, it will give you 2,160. We were supposed to say 2,000 to get 2,160, but we got 1,620. So which means that they are still owing us. So remember, interest income, you need to check how much is it short by. So if the amount that you're supposed to get here is 2,160 here, which is supposed to come here. Okay, so let's get the difference between the two. It will give us the amount that is still owed. So this answer minus 1,620, it gives us 540. So meaning that here we are short by 540. Now before we close this, we must check if there's anything that will let me not close this here, because there might be something that might affect this. So you must check for that on what your bank statement will say to you. Now here they're saying that the bank statement for February 2023 reflected the following. Number one, EFT fees. Once we see EFT fees, credit card levies, it's part of bank charges. So meaning that our bank charges is 170 plus 90 rand. This one will come back to it. Okay, so under bank charges, we're going to say plus 170 plus 90. So our bank charges here, we're going to say plus 170 and then also plus 90 rand. Then we can close this off because we are done dealing with it. And then next we go to our next item, which is interest on current account. We assume that it's a favorable balance because they did not tell us that it's an overdrawn current account. So meaning, and also if you look at this, you can just to get an idea, you will see that your bank here, they're saying it's favorable. So meaning that you have an interest on a favorable bank balance. So though they don't tell you, these are some of the things that you can look at. Okay, so now this interest on current account of 220 will go to our interest income. So here would say under interest income would say plus 220, and then maybe let me erase the total here because there was a transaction that affected this part, so I will erase this part. Okay, now from there we are left with, I think, about the things that have got to do with the depreciation. So now here they're saying that depreciation is calculated as follows. On vehicles is 10%, per annum on cost, meaning that we calculate on the cost price, and then on equipment is 15% per annum on diminishing balance method, meaning that on the carrying value. Okay, so now here they're saying an additional equipment with a cost price of 12,400 was purchased on 1 December 2022. This transaction has not been recorded, meaning that this amount that you are seeing here is not included in the trial balance equipment that you are seeing, so it has not been recorded. So let's start with equipment. We know that there was no new equipment that was bought, we just had the old one. And remember, for equipment, for vehicles, the amount is 280,000. So so that 280,000, if we say 280,000 multiply by 10 over 100 multiply by 12 over 12, because this was with us for the entire year. Okay, so I'm going to say 280,000 multiply by 10 divided by 100 and then multiply by 12 divided by 12. It is giving us 28,000. So that 28,000 will come here. So this is the first depreciation amount that we have. Now when it comes to our equipment, we must have, I'll start by calculating the new one. So for the new one, remember, when you just bought an asset, for the first year it doesn't have accumulated depreciation, so the carrying value for the first year will be the same as the cost price. So we'd say 12,400 multiplied by 15 over 100, and then we check how long has it been with us. From December to February, we have December, January, February, so meaning it's 3 over 12. So let's see how much we're going to get. So if we say 12,400 multiply by 15 divided by 100 and then multiply by 3 divided by 12, it is giving us 465. So we'd have that 465 here. Now for the old ones, we must get the carrying value first. Remember, for the old ones, the cost price, according to the information that we're given, the cost price for our equipment is 130,000. Okay, so we must know that so that we don't forget. So it's 130,000, and then the accumulated depreciation, which must be subtracted. According to this, the accumulated depreciation on this old equipment, it's on 1 March, it's 44,600. So meaning that we must subtract that 44,600. So we'd say subtract 44,600. Okay, so we subtract that 44,600 and then it will give us our carrying value. And then our carrying value, according to this, if we say 130,000 minus 44,600, it is giving us 85,400. So our carrying value is 85,400. So we're going to calculate depreciation on this figure for the entire year for this one. So we're going to say 85,400 multiply by 15 over 100 and then multiply by 12 over 12. Then it will give us the depreciation for this. So if we say 85,400 multiplied by 15 divided by 100 and then multiply by 12 divided by 12, it is giving us 12,810. So that 12,810 will become our depreciation figure for the old asset. So when we do our depreciation, we're going to add this 3. So we're going to go to our answer sheet and say here depreciation. Now let me confirm something. If you say 208,000 and multiply by 0.10 percent, okay, so it still gives you that 28,000 that we had. So we'd say 28,000 plus, we check the next amount that we got when we do calculation, it was 465. So we'd say plus 465 and then also plus the amount that we have here, it's 12,810. So also say plus 12,000 810. Then we just have to do our totals and close this off. Okay, now let's say it happens that you finish you leave it like this, you will have some bugs. There's no way you will fail when you have done it like this. Okay, now if you look at this, there was no transaction that had a return, so this 420,000 will remain 420,000. So we must then adjust our sales to get our net sales. So if we say 588,000, then we say minus 6,800, it is giving us 581,200. So we have that 581,200 here, and then 581,200, and then we say minus 420,000, it is giving us 161,200. Okay, then from there we need to make sure that we close off our accounts here. So if we say 36,200, 36,200, and then we say plus 3,400, it is giving us 39,600. So we have that 39,600 here, and then the sum of the two, 39,600 plus 10,150, it is giving us for 49,750. So we have our 49,750 here. Then our gross operating income will be the sum of the two, 161,200. So we take 161,200 plus our 49,750, and then it is giving us 210,950. Okay, then we are done with this part. So we go to our expenses. Now when we look at our expenses, we need to close them off. We have our insurance 12,500 minus 1,908. Okay, and the answer that we get is 10,520. So we have that 10,520 here, and then on our bad debts we're going to say 4.8 plus 600. So if we say 4,800 plus 600, it is giving us 5,400. So our amount here will be 5.4. And then from there, for water and electricity, we are going to say 19,100 plus 1,880, and then it is going to give us 20,930. So that 20,930 will come here. Now next, we have our bank charges. For our bank charges, we are going to say 4,200 plus 170. Let me just confirm something. Plus 170, and then we are also going to say plus 90, and it is giving us a sum of 4,460, and then we are done with this part. For packing material, we are going to say 7,100 minus 1,950, and then it is giving us the sum of 5,150. So you'd have that 5,150 here, and then from there you just have to do the sum for your depreciation. Very important, guys. So let's do that. Our depreciation is 28,000 plus 465, and then plus 12,810. The sum of the three is 41,275. Okay, now if you look at this, we are done with our expenses. We just have to get a total. So let's do it. 43,500 plus 3,320, and then plus 2,300, and then plus 10,520 plus 5,400 plus 20,930, and then also plus 4,460 plus 5,150 plus 1,800, and then we can go down and say plus 1.2, and then also plus 41,275. It is giving us the sum of 139,880. 139,855. So we're getting 139,855, but we can just confirm our calculations because here we were adding a lot of things. So let's see, 43,500 plus 3,320 plus 2,300 and then plus 10,520 plus 5,400 plus 20,930 plus 4,460 plus 5,150 plus 1,800 and then plus 1,200 and then plus 41,275. we are still getting the same amount, which is 139,855. So now to get our operating profit, we are going to get the difference between gross operating income and other operating expenses. Okay, so let's get the difference. Now if we say 210,950 and then we say subtract 139,855, it is giving us our operating profit of 71,095. So our operating profit is 71,095. okay, now let's get the difference again just to see if we got the correct figure. 210,950 minus 139,855, so it's fine. So now let's continue with the other part of the interest income. Now for interest income, what we must do, we must add these three items so that they can give us the total interest income we were supposed to get. So we take 1,620 plus 540 and then plus 220, and it is giving us 2,380. so that 2,380 will come here. Now profit before interest expense will be operating profit plus interest income. So if we say this 2,380 plus 71,095, it is going to give us 73,475. okay, so 73,475 here. So let's add again just to verify. So 71,095 plus 2,380, it is giving us 73,475. Then if we say subtract 13,500, it is going to give us the net profit for the year, which is 59,975. okay, so now this is how you roughly do an income statement, guys. I hope that this lesson has helped, that you guys have understood in terms of how to prepare an income statement. If you want me to personally tutor you, you are more than welcome to contact me using the details that are available at the description of this video. With that out of the way, thank you so much for watching. Don't forget to subscribe to YouTube channel. Don't forget to leave your comments down there and tell us how you want us to improve or which next topic you want us to discuss. Thank you so much for watching our morning lesson. May God richly bless you. Shalom.